Investing is easy as long as stock prices rise. But what happens when they don't? What happens when a stock that I've invested in crashes? Well, if you want to hear about that and also get an update on my 3 portfolios performance for last week, stay tuned. Hey guys, Kevin Burgess back with another video. This week I want to talk about what happens when a stock price crashes. And this kind of leads me into a life lesson that I've learned over my career. And that life lesson applies to more than just investing, but it certainly applies to investing. That life lesson is this: the situation you find yourself in does not define you. What defines you is how you handle that situation. So let's apply that to a stock. Let's say you buy a stock and the price crashes. That does not define you as an investor. What defines you is how you handle that situation. How do you approach it? How do you research it? How do you decide what to do next? That is what defines you and me as investors. With that in mind, I thought it'd be good to talk about a stock that I actually own that has done a bit of crashing, and that is Stanley Black Decker, ticker symbol SWK. So let's walk through some of the background on SWK. I did a video back in April on Stanley Black Decker, and at that time, this is the graph that FastGraphs had for Stanley Black Decker. You can see that it had moved up and down. This actually is a screenshot from the video that I did back in April. And you can see that the future looked very good for Stanley Black Decker, and the price was pretty far down. So I ended up adding to my investment in Stanley Black Decker. So now let's take a look at the graph today. Today, the graph for Stanley Black Decker looks a lot different. You see a big dip here now in the earnings, and now it does show that the earnings are going to come back, but it showed that earnings were going to go up from this point, as you recall from the previous graph. So things have changed a lot for Stanley Black Decker, and the price is one of those things that has changed. Now, so what I'm going to do here is I'm going to add in the transactions that I have done with Stanley Black Decker. I'm going to shorten the time frame down to about 5 years so you can see them easier. You can see that back in, November and December, I started a position in Stanley Black Decker, and then the bottom dropped out. I added to the position back in March for another 100 shares. And then I have bought 100 shares in June and 100 more shares in July. So let's flip over to Simply Safe Dividends and scroll down until I get to Stanley Black Decker. You can see that it is 4.4% of my portfolio. I am down 27.8% with an average cost of $132.94. On a positive note, the dividend safety rating for Simply Safe Dividends is a 90, so it's very safe, and the dividend yield is currently 3.33%. So being down about 30% on this stock, I thought it'd be an exciting video to share with you the thought process that I use to determine where to go from here. Now, just to remind you, one of the things that I find extremely important for this channel is that I'm totally transparent with you. So what you see here are the transactions that I'm making and what I do in cases where things just don't go the way that I thought they would go. So let's talk about some of the possible ways that I could respond to this investment. You'll see here on the screen in front of you some of the possible responses. First of all, I can respond and say, hey, you know what? I am just not a good investor. I quit. I sell out of the position without doing further research and move on and do other fun things in life. The second thing I could do is just ignore the stock and hope that it'll return to its previous levels. And many of you know that hope is not a strategy. The third thing I could do is blame someone else for causing me to invest in the stock. Maybe I watched a YouTube video and got an idea from somebody and I invested in that stock, and so now it makes me feel better that I can blame them for investing in the stock, when at the end of the day, I know that it is me that made the decision to invest in this stock. Or, fourthly, I can take ownership of my decision and research the best path forward. And item number 4, taking ownership, that's the path that I choose to move forward with. And how do I research the best path forward? Let's move on and look at another slide here. The first thing that I want to do to figure out the best path forward is to validate my thesis. There's 4 pieces to that, at least in my mind. Why did I invest in the stock in the first place? Is that still true? Is their strategy, is the company's strategy still good? Is the management team still solid? And does the valuation need to be adjusted? So let's talk about that with Stanley Black Decker. Why did I invest in the stock? I believe they have a solid line of products, and I believe that they're going to be very successful over the long term. I don't believe that these current market conditions have changed my thesis on the long-term prospects of Stanley Black Decker. So the second part is their strategy still good? We'll walk through that from their slides on this last earnings call. So these are the slides from the earnings call. You can see who the presenters were. The points I want to make here are that they've got some key messages. They've got total revenue of $4.4 billion. It's grown 16%. However, the organic growth, meaning the growth that is from non-acquisitions, actually went down 6%. They did have price realization of 7%, so that means that they are raising their prices in this inflationary environment. But some of this is just bad. I mean, it's just hard to cover up a 6% decline in organic growth. Let's move on down to the market demand environment. You can see here that they are projecting this market demand to decline, and that's not a fun story to tell. Let's move on and look at their guidance for 2022. Back in April, they were guiding us to about a $10 per share earnings. Now they've lowered that guidance to about in half, to $5.50. You can see all the reasons for that, but that's a hard story to tell. And another hard story to tell is about their second quarter cash flow. The free cash flow for year-to-date 2022 through the second quarter is almost $2 billion to the negative. And what is the main driver of this? Main driver of this appears to be working capital, and mainly around inventories. You can see that the same quarter last year, they had free cash flow that was positive by $93 million. So $2.064 billion in lower free cash flow this year versus last year. That's a hard story to tell. So now the question is, what are they going to do about it? So let's take a look at that in those same slides. So the first thing they talk about is they're going to put in a cost reduction program that over the next 3 years is going to bring about $2 billion in cost savings. About $500 million of that is coming from the sales general administrative expenses, and about $1.5 billion is going to come through a supply chain transformation. What are they going to do about inventory? They've got an inventory action plan here that relates to production curtailments, et cetera, et cetera. All of these tend to make sense to me. So let's just have a real conversation. Things don't look good for Stanley Black Decker. I mean, they've had a rough first half of 2022. And things look completely different than they did even 3 months ago. So the real question here is whether I still believe in their thesis and whether I still believe that management can pull this off. So given that Stanley Black Decker's story is so bad at the moment, that, in my opinion, is a great time to invest in the company. We want to invest when there's fear, not when there's greed. And I think Warren Buffett says something like that. So I don't want to steal that from him, but it's a paraphrase. It's not an exact quote. So moving along here, what's the next thing? We want to understand the risks. And the risks are, in my opinion, that Stanley Black Decker may fall short of its restructuring goals. I mean, we saw that on the slides. Those are big, huge goals, and they may fall short of that. The second risk is that the overall economy may continue to worsen, causing further pressure on the stock price. And you know, the overall economy meaning inflation and a slowing economy, et cetera, et cetera. So the overall macroeconomic risks that Stanley Black Decker is facing are real. I mean, let's be honest, they are real. And so that is a risk that we face with this stock. So then thirdly, we need to make a decision. Here's our 4 decisions that we can make. First is we buy more and average down, and then the question is, at what price do we do that? Secondly, we hold the position and wait for a better performance. Thirdly, we trim the position and expecting a further price decline. And then fourthly, we liquidate the position if the thesis is not validated. So in this particular case, I'm going to rule out D. I think the thesis is still valid. I think they've hit some speed bumps along the way. So I'm going to take out the option for Stanley Black & Decker of liquidating the position. I think the price of Stanley Black & Decker could go down from here, but it could go up from here as well. So I think it's probably nearing a bottom, although it may not be completely at a bottom, depending on what the macroeconomic conditions are. So it leaves me with, am I going to hold the position and wait for better performance, or am I going to buy more and average down, and then at what price? So my decision is I'm going to buy more and average down. I'm going to average down some at this price, and if it goes back up, so be it. If it goes down from here, I do have room to add another 100 shares or so to try and improve the price for Stanley Black & Decker. So I hope that was helpful for you regarding Stanley Black & Decker. Now let's take a look at the portfolio performance for last week. You can see for the week ending August the 5th, for each of the 3 portfolios, I'll take them one at a time. Let's start with the dividend income. It says yield on here, but I've changed the name of it to dividend income. It is a market change of minus 1.7%. So this portfolio actually declined by $5,000 in market price. I did put some money into the account, and I got about $525 in dividends last week. But the market value of the account went down about $5,000. Why is that? Let's take a look at some of the reasons for that. This is Seeking Alpha. This is the portfolio. And over the past 5 days, you can see that I've got a few that are green, but mainly they are red. And so if you look at Chevron, Hess, those are some of my oil and gas stocks. AbbVie was down, Prudential was down, Verizon was down. So there was just a lot of downward activity in the income account. Now looking at dividend growth, the dividend growth account actually went up about $857.71 or 0.1%. You'll see that this 0.1% is pretty much break even. I did get about $191 in dividends, so there's not a lot to talk about here. So let's take a look at the dividend snowball account. The dividend snowball account is up 1.4%. That's pretty exciting. So let's take a look at then Seeking Alpha and see what drove the dividend snowball account so much higher. You can see that the SOXX, which is the semiconductor ETF that I picked, was up about 2.9%. Starbucks was up 1.2%. Google was up 1%. Microsoft was up 0.77%. And even SCHD was up a little bit. So everything performed well in the dividend snowball account last week. So I'm looking forward to putting new $50 in and buying Starbucks, Google, and Microsoft. So overall, the portfolio was down by 0.5%, driven mainly by the dividend yield or dividend income account. So that's the update on the portfolio. Let me know in the comments below what you think about Stanley Black & Decker. Do you think it's good to enter here? Do you think the price is attractive at this point? Are you looking to hold for lower prices in the future? What are your thoughts on Stanley Black & Decker? I'd love to hear from you on that as well. So, and it's important just to keep in mind that situations don't define us. What defines us is how we handle those situations. So with that, I'll see you on the next video.